Hello traders, Gary Wagner with the Gold Forecast. It is Sunday, approximately 3:30 in Honolulu, Hawaii, which means the market has been trading for about 2.5 hours as it began in Australia. This is the daily report for today, December the 9th. Gold in very quiet trading this morning is up approximately $1.40. That is due to predominant buying as the US dollar price change currently is unchanged. On today's report, I want to talk about one, the candlestick that we saw on Friday, this long-legged doji, because it's absolutely significant. I'm going to show you some other places in history where we have seen that as really a major turning point within the gold market itself to signal a major bottom. And I also want to talk to you about some Fibonacci retracement levels. And we'll start with that. I have simply drawn a Fibonacci retracement level from this low that we had. And this is right around 1313. And I took that from the low up to this record top right in here, 1430. And as you can see, we've entered in our lines, our 50% retracement right here, our 61, and our 76. As you can see, Friday's activity, no doubt, that's this long-legged doji right here. Let me point to it so that we don't get it confused, but that's this one right here. That doji is so incredibly significant. The reason being, unlike the hammer at the bottom or a shooting star at the top, which tends to signal these tops or bottoms, the long-legged doji signals absolute consolidation and absolute uncertainty as to which way the market's going to go. It will typically appear as the market has a shift of power, but it can also be a resting spot before you have more downside activity. This candle must be followed through the week with a series of higher highs and candles that give us an indication if in fact we're getting near a bottom that's going to look something like this. In other words, what we need to see is we need to see the market seriously close above this 50% retracement level. This is that 1371, and you can see that it's kind of stalled right there. And in terms of closes in the market, you can also see that these different bodies have all closed right around that area. To me, that is very significant. So we need to pay very close attention to see where we're going to end up. Today, as we trade, of course, as it goes into Asia and then into London, it's really going to be as it goes through London and then back into New York that we'll start to get a clear indication. All of the traders should be back from holiday. We are well into the first week of January, so I think everything for New Year's and the holidays is set beside, and now we can see what kind of direction this market wants to go to. The other thing that I wanted to talk about was other points in history where I have seen this really long-legged doji appear. And there is one significant point. The absolute bottom that we hit, this is back in February of 2010. Now, this is after the market made some record tops at the end of December 2009 and then began to trade lower. The area that I'm looking at is this area right in here, and the doji that I'm thinking about is this one right here. I'm going to superimpose and blow that up. Now, the reason that that was so significant is it was at that point that many of the traders said that the sky was falling in and that we would have the market move back to 800. There was an incredibly strong amount of bearish sentiment in the market, and the market, in fact, did hit its first bottom, and when we looked at our Elliott wave, that was the end of the correction. So that is why I find that particular doji so important. Now, even as we speak, we are starting to enter a small rally here in the market. As you can see, we are now currently trading 1373 to 1374, and what was a small candlestick is now becoming an up day, meaning we are now seeing the first signs of this red kind of pointing out, just as we talked about a few seconds ago. Traders, I will look to see if we can find a buy signal out of this. And as we talked about last week, that three river star variation, that combination of a series of black candles coming down, the long black candle, the consolidating or small star type candle, and then followed by what we'll call that long red candle, we have seen appear, but we have also seen it appear as a significant number of candles. In other words, it doesn't always have to be one, and it doesn't always follow on the very next day. If we see continuation through, we're up right now about $4.80, $2 of it due to weakening US dollar and $2.80 due to predominant buying. If we see this trend continue, I am going to put out a special email to signal a buy signal. If it happens anytime during today, if it happens tomorrow, it will appear as our regular report. One of the suggestions, and I am going to be implementing quite a few of the suggestions, thank you so much for filling these surveys out, is that we need to have absolute clarity in terms of when we get these signals, where to place the stops. So one of the things I've chosen to immediately implement is if at any point through the day we find these signals, I will simply issue an email. That email will tell you to go ahead and buy. I do expect, if this market continues higher through the day, that we will issue a buy signal, and I will signal that with a separate email. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily report. Bye-bye.